We're here today with Jonathan Nelson from HackFund. Welcome. I'm Rebecca Hope from Block News, and today we are talking about decentralizing capital, specifically seen from or birthed from the Silicon Valley capital scene. So, welcome, firstly.
Thank you very much. Thanks for having me. Great to be here.
Yeah, really excited to hear about what you guys are doing. And I've seen from your website and information online that you want to decentralize capital. Can you elaborate on that?
Yeah, I spent 2.5 years advising the Securities and Exchange Commission on the problems that small businesses have in raising capital outside of Silicon Valley. So we did a deep dive on why so much money gets invested in Silicon Valley, why Silicon Valley. When it comes down to it, it comes down to the mechanism of how investors make money by investing in startups. Is we buy stock in a private company, and the only time that I can resell that stock is when Google acquires you or when you IPO and that stock can be sold on a stock market to anyone and everyone in the world. And those two things happen very, very infrequently. So if I have a venture fund, a traditional venture fund, people invest in my fund, I in turn invest in startups. It's only if those startups get acquired for $1 billion by Google that I and my investors would make money. So we're changing that. Essentially what we're doing is that we're adding a layer of liquidity. What does that mean? My investors who invest in my fund, they can buy, sell, and trade my stock. So I invest in startups. What I need from my startups is not for them to get acquired by Google.
Right.
What I need is for my startups to grow in value, to grow sales, God forbid, grow revenue, God forbid, be profitable. We can invest into smart, growing companies anywhere in the world because I don't have to have that company be in Silicon Valley so that I can flip that company to Google for my investors to make money.
Right.
What I need is for my stock and my companies to grow in value. We have a third party that actually values our portfolio. We will audit that. We will report that publicly as if we were listed on the NASDAQ. But instead of listing on the NASDAQ and spending millions and millions of dollars in fees, we will be listed on crypto exchanges as we're an ERC20 token.
Right. And you shared some staggering statistics earlier about the demographics of how capital is allocated, and the fact that 85% of liquidity in capital is in Silicon Valley, which doesn't really make sense in a world where location is supposed to be irrelevant, right?
Yeah, location is supposed to be irrelevant, but I have talked to dozens of investors in Silicon Valley where they're like, you know what, I will invest in any company as long as I can drive to their office in 15 minutes.
Wow. So location still makes such a difference.
It's a huge difference because it really is this old boys, and I hate to say it, it is old boys that tend to run venture funds. It tends to be this old boys network that invests in people like them that can invest in those companies and then flip those companies to Google, Facebook, eBay, PayPal, Cisco, that sort of stuff. And it tends to be very centralized and very local because of this core mechanic of, as an investor, I need liquidity from the investments that I make. I need my startups to get flipped to Google for me to make money. And so 85% of the world's tech M&A happens in Silicon Valley, which means 2/3 to 3/4 of the world's venture capital gets invested in Silicon Valley.
That is crazy.
Crypto completely decentralizes that. And now with liquid funds, with funds that have tokens that can be bought and sold, we can invest anywhere in the world. And what we need is for the company to grow, to measurably, provably grow. And ultimately, I think this changes how venture capital is done worldwide and opens up huge new areas like Eastern Europe, Africa, Latin America, the Asia Pacific, where you have brilliant people accessing the internet, and now they can actually receive capital just like any company in Silicon Valley could.
So let's talk about the demographics. That you were talking about the fact that there aren't that many women in this industry, and other kinds of ethnic groups. Could you elaborate on that?
Yeah, so one of the reasons the Obama administration actually name checked us as being very, very good in diversity and technology. That's not anything that we work really hard at. What we do is when people apply to our program, we remove names, ages, genders, and school you came from. So basically, your company is evaluated based on your company, not what you look like or where you came from or who your daddy was. Um, Venture-funded startups in Silicon Valley, less than 4% have a woman founder. Less than 1% have an African American or Hispanic founder. 60% of our portfolio have a woman, an African American, or a Hispanic founder. It's only 40% that are just all white dudes or all Asian dudes. And so, why is that? Essentially, it's this systemic, I don't think it's an evil meaning racism, but it still is a racism and sexism where, as an investor, you invest in people that you know.
Yeah.
Or people that you know, and they introduce them to you. And generally, the tech world was started by old white dudes who invest in young white dudes who invested in, white dudes and Asian dudes. And now,
Wow.
Latin America, however, is 10% of the world's economy, and it only receives $500 million a year in investment. Why? What successful CEOs do you know out of Latin America that what you hear out of Latin America is that there's cocaine and corruption, not the amazing tech innovation that's actually happening. That hasn't quite hit the news yet.
So Hack Fund then comes into the equation. This is how Hack Fund was born, and your proposition is to decentralize that capital, to have a fairer system of allocating capital. And so what's the short-term and long-term goal here with Hack Fund?
So the short-term goal is, raise a bunch of money to actually invest in amazing companies. We invest in securities. I think the SEC has said that most tokens are securities. So we will invest in tokens. We will invest in startup stock. I don't really see a whole lot of difference. And then, we will be making these investments. Our companies will grow. Long term is, I think that the new normal is going to be this idea of a digital stock certificate. A company should be able to, we can do seed series and series A investments into a company, but if you need more than 10, 15, $20 million, we should take you to a crypto IPO. I don't like the term ICO because these aren't currencies. These are public offerings of a stock.
Okay.
And so let's just call it a crypto IPO, but let's create a system of digital stock certificates so that it's not only our fund that has them, but our portfolio companies that have them. And then let's actually collaborate and build actual stock exchanges with compliance, with reporting, with that, but that are actually focused internationally, that are actually native to the internet, that are based on these weird internet technologies and don't necessarily need all the old banking gatekeepers as traditional stock exchanges do.
So what kind of investors have you been seeing that have started with Hack Fund?
So a large number of our investors, we've worked with 120 investors over the last 5 years in our previous 4 funds. Our current fund tends to be high net worth startup hackers who've made a lot of money by selling their technology company and who understand the pain of having all of their blood, sweat, and tears that they've invested into one company's startup stock be frozen for a decade until they finally get some personal liquidity. They get that. We work a lot with investors from around the globe who are interested in investing in cutting-edge technologies. We are hackers and founders, and the people in our community usually are building the cutting-edge technologies that people end up reading about 2 or 3 years later. So a lot of our portfolio just tends to come from bleeding-edge technologies. And a lot of our investors come from overseas, i.e. not Silicon Valley. They're interested in kind of getting a piece. They're interested in learning, and they're interested in actually growing their own personal net worth by adding this to their portfolio as kind of another asset class in their portfolio.
So you must be also seeing different kinds of investors, obviously with a different kind of mindset, right?
Yeah, no, absolutely. And, a lot of our investors are fairly forward thinking. I mean, this is a high risk investment. Venture capital is always high risk. We are diversifying that risk as much as we possibly can. We are investing in, 30 companies for every $10 million that we raise.
Mm-hmm.
And we are going to broadly diversify that. And we work very hard personally. We have 25 people in 3 different countries that actively work with our portfolio to help them grow, to help them get to the next stage. But this is high risk. People have to have an appetite for startup investing.
Mm-hmm.
They have to have an appetite for a bit of crypto.
Mm-hmm.
We are essentially developing an asset-backed crypto. But the asset that is backing our crypto is startup stock, which is ultimately based on startup revenue, is going to be the value of this fund, the value of these tokens. But long term, I believe that every asset that can be tokenized will be tokenized. The future is not just going to be tokenized venture fund, it's going to be tokenized real estate funds, tokenized stock, tokenized debt. All of these assets are starting to get tokenized, and we're reinventing the financial industry as we speak.
Well, Silicon Valley doesn't know what it has coming its way. Do you think that there will be, in reality, a change in Silicon Valley in the future?
Absolutely. I've talked with dozens of VCs in Silicon Valley. They're like, okay, what's this? What's crypto? What's a smart contract? What's this? A number of these investors are a couple of years behind the ball. And part of the problem is that the traditional investor agreement, it's called a limited partner agreement, an LPA. It's a 10-year contract where the VC says, this is what I'm going to invest in over the next 4 to 5 years. And over 10 years, you as my investor in my fund will see returns. That makes venture capital funds very unflexible. What was the technology world 4 years ago? What was the technology world 10 years ago?
Right.
Like smartphones were barely starting to become a thing in 2008.
You have to be flexible.
What's happened in crypto in the last 15 months? And so a lot of VCs cannot invest into crypto. And a lot of them are scrambling to figure out how I can adjust my limited partner agreements to do that or raise a new fund so that they don't get disrupted. And eventually, I believe that things will change.
It's not going to keep up because there's too much change too quickly. You have to be flexible. Okay, so let's just talk about the actual technology and how it's built, the architecture. Would you like to walk us through that?
Yeah, no, absolutely. A lot of our kind of core innovations have been on the legal and regulatory side. I mean, as I said, I've worked with 12 different law firms in 8 or 10 different countries, finding out what legal jurisdiction would actually be most friendly to this type of innovation. The Cayman Islands has a great set of laws. One is that our type of fund, which is a closed-end publicly traded fund, is unregulated, explicitly unregulated, so buyers should beware. And at the same time, they also have laws that say that they will not distinguish between a digital stock certificate and a paper stock certificate. So the combination of those two laws is pretty unique and allows us to issue digital stock certificates in a fund. Our technology, it's a very dumb ERC20 token. But in our incorporation documents in the Cayman Islands, it says, this fund stock will be represented by this ERC20 token.
Now, that may be a little bit worrying to some investors is the fact that it's in the Cayman Islands. Like, why, how do we know if anything changes politically there? Is it a stable environment? So what would you say to that?
So Cayman Islands has actually gotten a bad rap because 20 or 30 years ago, it was a destination for money laundering. They are actually really uptight about money laundering right now. So we have very strong KYC AML controls in terms of who can actually invest, who can't. We have to keep U.S. unaccredited investors out. So we only have a small number of accredited U.S. investors that we can allow in. So that's kind of built into our dashboard when people actually invest. Cayman Islands is actually fairly internationally known in the finance world as one of the world's top destinations for funds. If they're not in the United States, if they're not in Luxembourg, chances are they're Cayman. And so it's well trusted, well respected in finance space, but it still does have a little bit of that. It's a money laundering
Stigma.
destination, and that's not the case.
Mm-hmm.
You should pick many, many, many other jurisdictions to actually launder money in, as opposed to Cayman Islands.
Right. Right. Well, I mean, again, about location, we are in a space where, I mean, you can live, it's 3 months in any place in the world per year, so 3 months at a time here, 3 months at a time there. So residency and location and all those things are kind of up in the air at this point, and there's so many people running their businesses from all over the world, traveling around and spending a couple of months here and there. So there is kind of a gray area as to why necessarily have a company registered in the United States or in a particular location if you're not even living there, or
and honestly, no, you're absolutely right. I mean, this idea of borders, like lines that we draw on maps that say here you have to follow these rules, and 2 feet that way on the other side of the border you have to follow those rules.
Yeah.
Feels very archaic to us who kind of were raised in the internet. Unfortunately, countries have police who have guns and who have jails. And so we also need trust in the financial system. So a lot of people tend to trust some legal jurisdictions as opposed to others, because, for instance, if you have fraud in the United States, chances are they will come after you and they will jail you.
Yeah.
If you're in Venezuela, maybe not so much. And so there is still, as you're forming a company, you do need to do things like you need to have a legal entity. You do need to have a legal entity to have a bank account and introduce, connect with the traditional fiat systems. But eventually, these are a lot of problems that are going to start going away. And, there's a lot of geo arbitrage right now in terms of what countries are have the regulatory flexibility to actually work with companies. We're seeing that at Malta, Gibraltar, Cayman.
What kind of startups are you looking to build or to invest in?
So the vast majority of our companies already have product. They are already in market. We do very few pre-product idea stage companies. The vast majority of our companies actually have a bit of revenue before we actually get involved. And so they also tend to be kind of what comes through our application and filtering system. We have a global network of tech entrepreneurs who have attended Hackers and Founders events, and so they usually get, they apply, they get referred in through people that we know, and then they go through a selection process that's very process-driven, and then we'll actually sit down and say, can we add value? If it's a photo sharing app for your cat, I don't really care.
Yeah.
And it's probably not going to good fit because I'm not going to be interested or involved. But if you have a company that's solving a business problem that's actually has a business around it, that's actually a lot more just. And those tend to be the companies that we actually invest in.
That you match with. Okay. So we're talking to Jonathan Nelson today from Hack Fund. Thank you so much for sharing more about your company and for joining me today. It's been really interesting to learn about what's going on and a question that I've had on my mind about Silicon Valley. So thanks for clearing that up. It sounds like you've done some investigative research as well and really want to solve that problem and kind of decentralize capital, right?
Decentralized capital, and we'll probably disrupt Silicon Valley in the process.
Let's see where Silicon Valley is in 10 years from now. Okay, so thank you so much, Jonathan. I'm Rebecca Hope from Block News. I'll see you soon.